Welcome back to Alpha Recap. Adam here. Markets were closed for the day, and we're walking through the headlines that dominated the tape after the close. As always, if you have questions, you can reach us at stockalpha.ai and use our Q&A there. Joining me is James, our markets analyst. James, great to have you.
Thanks for having me. Nice to be here. Plenty to dig into from today.
Let's jump in. The three big threads I kept seeing were executive moves and AI execution risk at one of the big platforms, a mysterious ownership filing tied to Tesla, and some noisy activity in crypto and related ETFs. James, start us off. What jumped out to you?
Right, it felt concentrated. First, Meta's head of product for the AI for Work push left. That raises execution questions for a high-profile monetization roadmap. Second, a Form 13G tied to Tesla included some eye-catching percentage figures that didn't make immediate sense. And third, crypto strategy yields and heavy ETF volumes suggested elevated short-term volatility.
Okay, quick clarification. When you say the filing had odd percentages, what were we looking at?
The summary listed figures around 114%, about 46%, and essentially flat at 0.09%. Without the full filer's identity and context, analysts flagged it as a potential event-driven flashpoint until clarified.
So those three headlines set the tone. Let's unpack each area. Start with litigation and shareholder actions. There was a cluster of notices today, right?
Yes, several law firms put out lead plaintiff solicitations tied to a handful of mid-cap names. Pix NV, Globant, and Graphic Packaging were among them. The notices cited past loss figures and other metrics, which is standard, but the clustering matters because multiple contemporaneous solicitations tend to raise a temporary legal risk premium across similar-sized stock.
Right, so what should people be watching next on that front?
The next catalyst are formal filings, motions to appoint a lead plaintiff, complaints or early settlements, court dockets, and any 8Ks or counsel press releases will be the earliest, clearest signals that the market will react to.
Short reactions. Litigation clustering is a sentiment risk.
Exactly. It can amplify volatility around mid-cap names, even if the underlying business hasn't changed.
Moving on. AI and commercialization. Meta's executive exit looked like the headline, but there were also partnership and agency wins across smaller players. Talk through that balance.
Sure. Meta's departure introduces execution risk at the platform level. Analysts noted timelines and rollout cadence could slip. At the same time, we saw partnerships and commercial traction from more focused vendors. An MOU in Seoul pairing orchestration software with AI appliances for real-time operations. Agency wins showing very high return on ad spend, and some game and developer projects getting accelerator support.
So that's the divergence. Big platform timing risk versus narrow players actually showing near-term revenue impact.
Yes, it's a two-track pattern. Platform-level uncertainty alongside point solutions that are proving product-market fit in specific use cases like manufacturing, logistics, and commerce campaigns.
Quick filler. I mean, when you step back and look at this, that split felt important.
Right. And the other thing is talent signals. There were workforce programs and training initiatives noted too, building a pipeline for hardware and quantum skills, which matter over the longer term for commercialization.
Okay, let's talk crypto and levered product volatility. This was noisy. Start with the yields we saw reported.
A private wealth group published short-term strategy returns showing 30-day annualized yields up to about 58%, with other strategies at roughly 35% and near zero. Those numbers illustrate how concentrated and frankly risky short-duration crypto yields can be.
Wow, 58% is eye-popping. But obviously that comes with significant risk.
Absolutely. High yields can attract attention, but sustaining them typically requires elevated leverage, active risk management, and exposure to illiquid instruments. Separately, we saw heavy trading in a Bitcoin futures ETF, which finished the day down about 1.4% on roughly 200 million shares changing hands. That was notable volume.
And there were big moves in leveraged and thematic products as well.
Yes, a leveraged small cap inverse product rose about 2.7% on volume of roughly 360 million shares. Another momentum themed product jumped about 4.8% on heavy volume near 315 million. Those price moves reflect how liquidity and trader flows amplified intraday action.
That kind of volume can create dislocations, right?
Exactly. When you have concentrated volumes in ETFs or leveraged products, you can get liquidity-driven price moves that aren't fully tied to fundamental valuation, more to do with positioning and flow.
So viewers should watch whether these volumes persist or were a one-day spike.
Yes, net flows into and out of futures and ETF wrappers, plus any follow-up disclosures from the wealth manager on how they constructed those 30-day APRs will be important.
Short reaction. Liquidity matters more than ever in these products. Yeah, that tracks. Let's cover some corporate strategy headlines. Johnson & Johnson made a headline move today.
They said they would stay out of the GLP-style obesity drug race and instead concentrate on oncology. That's a clear strategic narrowing. It changes where they allocate R&D dollars and helps analysts reframe future revenue expectations relative to peers who are pursuing obesity treatments.
And there were some smaller M&A and product launch items too. Premium Guard finished a Phase 2 acquisition step. Quasun is debuting a new photovoltaic module at a trade show next week. And a medical device company enrolled its first US patient in an early feasibility study.
Right, for smaller acquirers, execution on integration is the next test. For tech and energy product launches, the show coverage and certification updates will matter. And for the device maker, enrollment milestones kick off the clinical timeline that markets tend to watch closely.
Quick reaction. Operational execution will likely be priced more heavily than the announcement itself.
Exactly.
A couple more short items. Free Cash was reinstated on the Apple App Store, restoring distribution to about 80 million users. That removes an immediate headwind, but keeps policy dependence in play.
Right. Reinstatement clears an obvious drag on downloads, but ongoing App Store policy risk remains a material factor for monetization assumptions in ad tech and platform-exposed commerce businesses.
We've got to touch on that Tesla filing again. Quick take?
Short version, the Form 13G summary had unusual percentages, as I mentioned. Until the filer identity and intent are disclosed, traders may treat it as a potential catalyst. It could dissipate with clarification, or it could attract event-driven strategies in the short run.
Okay, let's do a rapid-fire round of the other names that were in the brief bullets. Just quick notes.
PixNV, Globant, and Graphic Packaging all had lead plaintiff solicitations, legal developments to monitor. The ProShares Bitcoin Strategy ETF saw heavy volume and a modest drop. Leveraged and thematic products showed outsized moves and volume, and small biotech and device names posted discrete progress, enrollments and network launches.
Nice. Now, before we wrap, what are the emerging patterns you're watching? The themes that tie these headlines together?
4 quick patterns. 1. Litigation spillover. A cluster of notices increases near-term legal sensitivity in mid-caps. 2. AI divergence. Big platform execution risk is coexisting with accelerating commercialization among niche providers. 3. Crypto's dual pulse. Big short-term yields on one hand and liquidity-driven ETF repricing on the other. 4. Talent and infrastructure bets. Programs and networks that support long-term capacity in tech and healthcare.
Good summary. Before we sign off, give listeners 3 clear takeaways they can remember from today.
First, a small set of concentrated headlines. The Meta product lead exit, the ambiguous Tesla filing, and the crypto yields and ETF flows set the tone and could keep volatility elevated in the short term. Second, Litigation notices across several names represent an additional clustered sentiment risk to watch until resolved. Third, despite platform-level uncertainty in AI, specialized vendors and partnerships continue to show real, measurable commercialization, so the sector is not monolithic.
Perfect. Quick reactions. Honestly, I was a bit surprised by how concentrated the headlines felt today.
Yeah, sometimes the market hangs on a handful of items, and that was today.
All right, closing notes. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. James, appreciate your color.
Thanks, Adam. If listeners want more detail on any of the filings or flows we mentioned, drop a question at stockalpha.ai and we'll follow up.
That's a wrap for today's Alpha Recap. See you next time.